Good morning, family. This is Dr. Financial Literacy coming to you with another wonderful episode. Today I'm going to talk about the HELOC, HELOAN, and all-in-one. One of the things that I'm trying to do is look at my debt and consolidate it. In general, I have used a HELOC in the past in 2008 during the first market crash, and it helped me to acquire a property for about $47,000. And currently that property is valued at about, according to Zillow, $250,000. So right now I have three properties. I lost one during the bankruptcy and I'm moving forward. One of the things that I wanted to share with you today is my attempt to consolidate the debt into an all-in-one. So right now I'm gonna start sharing my screen. And the all-in-one is first I'm gonna talk about the three types of loans that I'm looking at. One is a HELOAN. A HELOAN is kind of like having your mortgage, and then on top of it, a lender or bank will provide you funding with it. HELOC is also the same thing, putting a loan on top of your mortgages, and a lender will help you. The difference between a HELOC and a HELOAN, the major one that I'm looking at is one is a credit card, or it can be also a checking account that I can put money in and each day hit down the principal. The other is also an all-in-one. Now, the all-in-one product is a combination of a banking and checking account and also your mortgage, and they can fundamentally replace your mortgage. So right now I'm carrying three mortgages at about $144,000. So I'm looking at using the HELOC or the all-in-one strategy. This particular one that I'm looking at now, and I'm going to show you the calculator, is the all-in-one strategy where I'm replacing all my mortgages with one. Okay, so the original balance of my current mortgages are $144,000. The current balance will be $144,000 because again, I'm replacing my entire mortgage. The interest rate on average with the three, I calculated at 6.21. The terms, I'm looking to say, okay, let's do this loan for 30 years because that's what it's going to compare to. So it automatically calculated the payments at $882.89. Currently, I'm paying just the principal only, about $1,211. Altogether with principal and interest, it's about $2,061. So at least combining all the mortgages into one will give me a lower payment amount. And this calculator can be found at Accelerated Strategy LLC, and they're called the Kwok Brothers. Okay, so now that we have that, the implementation date is starting the 5th, if I was starting in the 5th. But right now I'm waiting for an answer on my loan. My monthly income from my W-2 job and also my expenses are about $7,334.94, my monthly income. And that's from my three properties, my consulting business, and my W-2 employment. And my outgo is about $3,711. Now, I've been quoted in general, when you're looking at an all-in-one, there's a high ceiling and a low ceiling for what is the interest rate. The low ceiling is about 475, I think, according to the documentation, and they can go as high as 14%. So I'm being very, I guess, maybe liberal in the sense of using the highest that I can use. And the annual increase, there's different amounts here. They suggested putting in 2.25, but I'm gonna just go with 1% just to give it maybe the highest that it can go. I mean 1% as an annual. So when I look at the results, if I'm able to get an all-in-one HELOC and then replace it with my mortgage and then dump my income of $7,000 into it, then I can pay this thing off in 4.6 years. And the interest owed, if I just go to 30 years, 173,840. The original tip was $121, and that's what over you're paying. So in general, it seems like if you get a 30-year mortgage, you're going to pay at least that mortgage and then add some. Or some people say buying a second home for in general. The new tip interest, if I get the all-in-one, would be 40%, and the interest saved is 116,000 and 81% saved. All right. So in general, it seemed like a no-brainer. So what I'm gonna do is continue to investigate this in general, to see what could be one of the options for me. Again, this is Dr. Financial Literacy. Thank you very much for stopping by.